Welcome, everyone. Thank you for sparing your time to join this webinar. We've got a great panel today. We're going to be talking about compliance, the travel rule. We're going to get into the details there. We're going to be talking about exchange infrastructure, talking about what institutions need to care about when thinking about their tech stack, but also especially on the compliance side, on the reporting side, how to ensure integrity of these systems. Maybe to start off, we'd love to do some introductions. Let's start with yourself, Lana. Lana, would you mind sharing a bit about yourself and your company?
Yeah, no problem. Hi, everybody. My name is Lana Schwartzman. I am head of regulatory and compliance at Notabene. At Notabene, we serve as the trust layer for global money movement, powering the largest travel rule compliant network in the world. And we help businesses conduct secure, transparent, and compliant cryptocurrency transactions while navigating complex regulatory landscape, of course, including the travel rule. And before joining Nota Bene, I served as a chief compliance officer at two different crypto companies, as if once wasn't enough for me. I've spent 20 years in the compliance space, and 13 of those have specifically been focused on crypto compliance.
Excellent. Amazing. Reba, if you would like to do the same.
Hello, I'm Reba Beeson. I'm General Counsel of AlphaPoint. We are an institutional-grade digital asset infrastructure provider. We power the next generation of financial marketplaces, payment networks, and banking. So we help launch digital asset exchanges and brokerages, and we have a comprehensive trading platform that's scalable for enterprise or for entrepreneurial use. We can provide white label solutions, or we can also make flexibility to do API integrations in supporting business applications. I have a Wall Street background. Prior to joining AlphaPoint, I was the Deputy General Counsel of World Gold Council, which hosts the world's largest gold-backed ETF, GLD. And before that, I had various stints at some Wall Street firms and with banks. I at one time headed up the complex financing group for BNP Paribas, and I also was in the alternative investment group of UBS.
Amazing. And I'm Hemant from Cryptio. I'm the CRO, and I've been working for the last 4 years helping financial institutions and enterprises in crypto do their accounting, reporting, internal controls, helping them pass their audits, helping them IPO. And I'll be your moderator today, and we'll be going through several different topics. But the first one is going to be with Lana, and she's going to take us through the travel rule and explain the details there. So get your notebooks ready and take all the notes you need, because we've got an expert here. So over to you, Lana.
Great, thank you. Can you confirm you can see my screen? My share screen?
Yep, we sure can. Yeah.
Okay, perfect. Let me just, there we go, move it over so I can see your faces as I talk. All right, wonderful. So yeah, why should crypto companies care about travel rule? Why are we discussing it today? Going to be very brief. Of course, if anybody has any questions, feel free to save it for the end or reach out to me. But before I explain travel rule a bit, I want the kind of participants to understand the core problem that led to travel rule in the first place. And that, simply put, there is not much trust in crypto. We had some Wild West years in crypto with some really bad headlines. Some of them you see right here. But that certainly has changed with more and more crypto regulatory clarity and law enforcement leaning into the power of traceable blockchain and blockchain analytics, helping them crack down. And because of that, we have seen these kind of crackdowns on non-compliant VASPs and, of course, fines for AML and sanctions violations. And when we think about it, in traditional finance, right, trust is built through identity verification and licensing and due diligence. And we also have the SWIFT networks that helps with that. So The same applies in crypto, right? Trust in the transaction is created when you know your counterparty is legitimate, regulated, and is not facilitating illicit activities. It seems, very something very easy and normal to understand. Um, and so before travel rule, VASPs had little visibility on their counterparties, potentially allowing transactions with suspicious counterparties. And with travel rule, VASPs now perform risk assessments on each of the counterparty, and with confidence, they can transact safely with their trusted counterparts. So travel rule ensures that the transactions are reaching the right counterparties, and so reducing fraud and misuse of funds. And travel rule helps identify the sender and the receiver of the crypto transaction, bringing this trust back into the ecosystem. Its goal is not just to transmit the identifying information, but it is to use that information to combat fraud, money laundering, and terrorist financing. And a lot of time, the industry forgets this point, and they're just focused on like, how do I send this? How do I send this? Information transmission part of it, but not unlike why are we doing this in the first place? So why is this important, right? Because it really is not just about sharing this data. It's about what virtual asset service providers do with that data. When a VASP identifies a potentially illicit transaction before it hits the blockchain, they're expected to take these preventative measures, such as freezing the transaction and filing a suspicious activity report. And a lot of times I get asked, but what about companies that don't operate in regulated jurisdictions? Why does it matter? Do they still have to comply with the travel rule? And the answer is yes, absolutely, because we really are nearing the critical mass of travel rule adoption globally from all sorts of jurisdictions, from big to small. The EU's transfer of funds regulation last year effectively ended what used to be called the sunrise period, and now what I like to call is the dawn of travel rule. The TFR mandates that anyone that does business with EU customers, that they follow certain rules. And in the early years, US has kind of led this initial push for travel rule on a global scale, both in terms of enacting it within the US, as well as kind of leading the efforts with FATF to make it one of the most critical requirements of any crypto regulatory regime. And Singapore, UK, Hong Kong, UAE, and so many more global jurisdictions have travel regulations in place. So there is this hurricane of regulatory pressure in combination with counterparty pressure for travel rule compliance. So we have this opportunity, and we as compliance professionals, to really turn compliance not just into a cost center, but to help increase business. Why? Because not complying with the travel rule will increasingly exclude VASPs from international transaction flows. And of course, nobody wants that. So for VASPs to continue transacting with their key international counterparts, it is essential that they are ready to comply with travel rule. In our State of Crypto Travel Rule report, it showed that 66% of VASPs restrict withdrawals if the counterparty can't receive the travel rule information. This means that non-compliant VASPs are increasingly being cut off from transactions. So to sum it up, travel rule adoption is key due to regulatory pressure, and this is used basically for risk mitigation and fraud prevention, and to ultimately build trust in the ecosystem so we can all feel safe with crypto. And then you have counterparty pressure and a way for companies to stay connected to the global financial networks. Sure, I didn't miss anything. Yeah, and if anybody wants to receive a copy of our State of Crypto Travel Rule report, we're going to be launching it, I think, in like 2 or 3 weeks for this year's version of it. Please feel free to scan the QR code, and afterwards I'll also throw it in the chat for you guys to sign up for early access of it. I hope that was that time.
Right on. Thanks, Lana. That was exceptional. An exceptional summary with a lot of detail. And sunrise period is over, basically. We're at the dawn of the travel rule. And it's compliance, but as you said, like if you are not complying with the travel rule users won't be able to send you funds, essentially, and you'll be excluded from these flows. I've recently seen it personally as well when I'm trying to withdraw from certain exchanges. It makes sure it sort of lists the exchanges I'm trying to send it to, and if the exchange I'm wanting to send it to is not on one of those lists, it doesn't allow me to withdraw my funds to those places. So it's real, it's here, and it's essential for an exchange or financial institution to be able to access these global financial networks. So thank you so much, Lana, for that great introduction. We'll be moving now to Reba, who's going to be talking about the institutional shift and how, kind of leaning on to what you were saying, Lana, like compliance is a product driver, it's a business driver. So Reba, over to you.
Yes, thank you, Hemant and Lana. That was an excellent presentation. Just to continue on with that presentation, I think of it as being driven by sort of top down, first the regulatory framework, which is what then is being adopted on a global basis, as you've said, Lana. And that sort of created the guardrails for protecting investor interests, as well as being able to hold up market integrity. And so now that that's being implemented around the globe, I also see bottoms up approach where institutional participants, whether they be investors or whether they are offering their own products and services around crypto, are themselves now adopting this, and their investors and their, let's say, constituents are sort of forcing it upon them, because in order for them to be able to deliver these products into the marketplace, those who are purchasing them want to know that what they're offering is safe and secure, that the risks have been mitigated, and that there's somebody standing behind it if something happens. So I see these two different avenues converging. At AlphaPoint, when we look at how we address this in the marketplace, what we see is that financial institutions are trying to leverage technology. They had always thought about it as a build versus buy kind of approach to it. But as these systems are getting a little bit more complicated, and they are sort of like high risk, trying to make sure that all the appropriate things are integrated into it, they're increasingly looking to source opportunities with technological developers like ourselves. So they're embracing partnerships. They're looking for integration of some of the key services like custody, AML, KYC, and the like. So we see this evolving, and we see it coming at it from the perspective of the regulators as well as the underlying institutions and the investor base.
Thanks, Reba. That was a great overview. Sorry, I did the classic, left on mute there.
That's all right.
Yeah, we had a question in the meanwhile. Maybe I start with the question, and that will help us sort of flow into the panel discussion as we follow. The question, I think this one is directed at you, Lana. How could regulators address the gap in the travel rule enforcement for non-custodial wallets and privacy coins? So people are moving their assets to non-custodial wallets. How do regulators deal with that?
So the regulation for non-custodial or self-hosted wallets depends on the jurisdictions. You have very strict prescriptive, for example, regulations on how to deal with self-hosted wallets in the EU, for example, under the TFR. And then, for example, in the US, you don't have the same restrictions with self-hosted wallets. So it really varies across the jurisdictions. And, to answer the question of how should regulators address this gap in enforcement with non-custodial wallets, that's a great question for a regulator. I unfortunately do not have that answer. I think generally, moving towards a harmonization of some of the standards is, of course, ideal. It's gonna maybe this push is gonna start to come, I think, maybe from a global regulatory body like FATF, I know currently there's a second consultation on the way for recommendation 16, which is the travel rule. Maybe we'll see those updates in there, but there is unfortunately no like quick answer that I can give you or a great solution for it on how to solve this, because of course this is at the regulators, at the NCAs, and kind of on these national levels. And it's a lot of different opinions. Countries, just like we, as companies and institutions, countries also have their risk-based approaches, different ways that they view crypto, and wanting to enable the technology and business in there. So there's different approaches to it, and there is no right answer that I can give you, other than the fact that this is brought up, I would say, at the FATF level. It's something that is brought up in the FATF Virtual Asset Contact Group that we're a part of, and I do hope that we'll kind of all move in that direction with some sort of harmonization for that.
Right. And yeah, this question about self-custodied wallets often comes up, and it kind of speaks to kind of this inflection point that we are in crypto, I think. One is where you've got the animal spirits of the cypherpunks, where all of this started, where everything was supposed to be self-custody and enhancing privacy and privacy and liberty of the individual. But then as soon as you start to sort of scale this infrastructure to be able to replace a lot of this, financial institutions doing serious business, you need to have measures to make sure that money is not landing in the hands of sanctioned individuals, terrorist organizations, etc. And the only way to do that is to have these pre-confirmations, to know who your counterparty is.
Yeah.
And how this plays out, I think, is going to be a debate that continues for a very long time, and probably won't be sort of one global framework. But as you mentioned, maybe there'll be transnational organizations that work on this. Maybe in the same way that tax regimes work across jurisdictions today. Let's see.
Right. And I would just maybe quickly add, in terms of the personas, since you mentioned like cyberpunks and all of that, it's also, if we look, like I said, I've been in crypto from like the early days, and watching the crypto compliance evolution as well. And you really see the different personas, right, that are in crypto, from like the early adopters, like you said, were the cyberpunks, right, to now being more sophisticated institutions and fintechs and regulated entities, and others that really care about compliance and risk. So in a way, we've gone from pseudo-anonymity, I would say, to kind of this institutional legitimacy, and compliance actually is the bridge for us to have gotten there from like the early days, as I started out my presentation, of the Wild Wild West, to kind of where we are now, that like, banks are part of this equation, and Fidelity is doing something with crypto for retirement accounts. So like, right, like it took time to get to this place, and it wouldn't have happened without this legitimacy, and without this like persona, change, I would say.
For sure. And maybe just to speak to that, we've seen that at Cryptio as well, where we started out with these sort of, I think it was 2018, with all of these sort of, the world's going to go non-custodial, everyone's going to have a wallet, everyone's going to just work on DeFi, and nothing else matters. And now it's clear that that enthusiast market was only so large, and that most people want kind of a CeFi front end with a lot of control and measures that have been taken by the CeFi entity, the service provider, the VASP, to make sure that they're taken care of. And I was actually in a meeting with the federal banking regulator in the US in DC at DC Blockchain Summit. And what was very clear is that, hey, we would just give this to the VASPs, and the bank says, this is great for you to serve your clients and grow your business. So it's just clear that the persona that takes us from, I don't know where we're at, 300 million crypto users to 3 billion crypto users, this next 2.7 billion users, they want a lot of this compliance infrastructure to be taken care of by the VASPs, so they can benefit from the efficiency gains of this new technology, and maybe some of the other benefits and use cases. So yeah, really interesting there. Now,
I wholeheartedly agree with that, by the way. I see from my perspective, and I would say from the perspective of AlphaPoint, is that what we see is that there's a regulatory compliance and investor protection are really increasingly paramount to growing the whole ecosystem around digital assets. And there is, I think, pent-up demand by those who might traditionally be using the banking system to be able to invest in crypto, but to be able to feel comfortable that their money is going to be secure when they invest in these various crypto assets, that they can be able to preserve the value of them, or at least that they're being custodied by those that they can trust. So I see that there's going to be a big upswing in those types of investors coming onto the marketplace.
For sure. And maybe moving on to the next topic in our discussion, and this kind of speaks to one of the questions that's popped up here from Sam, which is, what advice would you give to a compliance officer who's starting to operationalize the travel rule? And maybe we can extend this to what advice would you give to a VASP looking to improve compliance in general? And Reba, I'd love to hear your thoughts on that as well. And what do you think that they underestimate in terms of complexity and maybe things that are easy to miss if someone's approaching this fresh, and things that they should keep in mind? Lana, maybe to start with yourself here.
Okay. So that's a lot in there. Okay. Let me try to unpack it and hopefully I'll remember it. Also, you might have to like remind me if I miss a point in there. Okay, so if you're starting out in the space, what you should do, right? That was kind of the first part of it, especially as it pertains to travel rule. Listen, like I said, a few years ago, right, travel rule felt like this mismatch, maybe a regulation from the traditional world trying to fit into like this crypto decentralized ethos, if you will. But as we just spoke, crypto matures and institutional players enter the space, and this mindset is shifting, right? And so compliance is no longer a blocker, right? That's how I view it. It's a gateway to legitimacy and to partnerships and to growth. So if you're starting out in the space, you just, keep that in the back of your mind. When I was a chief compliance officer, I always said my compliance program is user centric, right? I did not want to be the blocker in the business. I always wanted to be the enabler in the business. And there's ways of thinking through controls that would allow us to do that. And so too with travel rule, right? And kind of travel rule, just going back to the point of travel rule, right? The adoption is really kind of this network problem, right? Where you need both ends of the transaction to be travel rule compliant. And at Notabene, for example, we built the most secure platform for this payment authorization, where, of course, part of it is travel rule. And we're now seeing this regulatory enforcement increasing, especially in jurisdictions like Singapore, Japan, like I said, EU, and others. There are, I would say maybe one of the most misunderstood parts of travel rule are the self-hosted wallets, as we saw from the question we just got. Self-hosted wallets themselves are not regulated, but transactions to or from them, that's what would often trigger this enhanced due diligence and or kind of this verification of ownership, depending on what jurisdiction you're in. So what, if a VASP facilitates a transaction, for example, with a self-hosted wallet, they're still on the hook for compliance. And you need to have that as part of your, policies and your procedures, and really have these like clear internal guidelines, right? Especially if you're dealing, with stablecoin. Stablecoins have a lot of traction right now. So this all needs to be a part of it. I feel like I'm missing a second part of the question. Can you remind me what was the second part of that? It was starting out travel rule, what you need to do. Oh, build versus buy. Was that part of that?
No, not quite yet, but we'll get
Not
to
quite
that.
yet. I felt that it was going in this direction. Like if I'm new, like
What do you
which way
think people
is
are
there?
underestimating? Well, what do they underestimate when approaching this operationalizing the travel rule enforcement?
Yeah, that that it's really easy, that you can just have a check the box solution, that nobody's really paying attention to this, and it's not really looked at. I can I was going to say that I can guarantee you, but I shouldn't say that. So I'm not going to say that. But I can certainly tell you that in my conversations with various regulators internationally, they are enforcing it. They are looking at this when they are coming on site. Some that are a bit more mature in this process than, of course, newer ones like in the EU just went into enforce. So it really does depend on your jurisdiction, but you're going to start to feel the counterparty pressure. you're going to start to feel the regulatory pressure. Do not underestimate, do not think that this is easy and you don't need a company that has, you know, the deep subject matter expertise to help along, you know, through this process. It is beneficial because it makes your compliance stack stronger, and it is part of a compliance and kind of a healthy AML and sanctions program. And overall, it's going to reduce your overall risk exposures. There's a lot of benefits to it, but it has to be done right. And a lot of people underestimate, thinking like, oh, no problem, like I could just do this myself. Some are crazy enough to think that they can build something and then they just come back to us. So that never works out well.
Maybe to build on that and pass the ball to you, Reba, you guys bring sort of exchange infrastructure. What do you think that VASPs or people who are looking to bring crypto products to market, what do they underestimate when it comes to sort of building out the stack, building out the ledger, building out the brokerage, building out, you know, all of this infrastructure that you guys have mastered? What do you think is the piece there that people underestimate?
Well, I think I would follow up on what Lana said in that regard, which is that there's a lot more to it. It is not a simple process. And that's why it really is incumbent upon all of those who are participating in this, whether it be providers of the software like we are, and we are integrating different services around that, or whether it's the VASP itself, to be able to have robust policies in place, and also due diligence with all the counterparties. Because that due diligence, sort of what I call analysis and questionnaire, can provide the roadmap for whether there are any red flags or whether there's an opportunity there that might be able to be addressed. And it also depends on the jurisdiction, as Lana said as well. And so what we look to do is to try to find best in class of those who participate in the ecosystem with us, whether it be by integration of the different services onto the platform we develop, or whether it be third-party providers that then are already in contract with the VASP themselves. So I think what's really important is that one strive to be a VASP strive to be best practices, because adopting best practices, let's say some of the most stringent regulatory frameworks, adopting that kind of policy to address that, to comply with that, that then opens up, I would say, opens up the doors to be able to transact, to be able to offer services in other places, other jurisdictions. It sets a tone that the regulators will then feel comfortable with. And I really think that that's the most important, critical part of it. It's an opportunity because it can create a moat around a business if one is applying best practices in implementing these various regulatory requirements.
Sure. It seems like there's a lot of sort of institutional players that are outside of crypto and digital assets who are now seeing, you know, the regulation change. They're seeing the opportunities with stablecoins. There's market structure bills on the table that might move forward, and they're looking at, okay, how can we bring products to market? Reba, could you tell us a bit about, you know, how should such an institution who's not got crypto exposure think about the build versus buy question, right? How do they make a decision as to, you know, whether it's worth hiring a team of engineers, you know, building that source code? And does that give them an advantage? Does it not? And how should they evaluate this problem?
Well, I think that, as is the case with any kind of new business initiative, one has to do an analysis built on the strategy and based upon a strategy. So part of that is, what market is a particular player trying to address? Is it an existing customer base, or is it trying to expand into a new customer base? What is the budget for that? What are the resources? What kind of staffing? What kind of operational procedures need to be put in place? Where are the gaps? And it's in that gap analysis that buy versus build analysis gets taken up. And we find that there's a real growing market now in the banking system, especially because in the US, the regulatory framework is kind of shifting to the positive direction of allowing banks to embrace this kind of offering to their marketplace. So we find there that they're being very diligent and thoughtful about that process. And in making the decisions, one of the key factors is if there's a tech platform that's already been built, that's been proven and tested, it's secure, it's transparent, it's a reliable, trusted type of platform, oftentimes we find that there is a move toward that direction rather than staffing up and trying to build. It can be expensive to build in-house if the proper resources aren't dedicated to it. And oftentimes, all the different services that need to be incorporated into the platform are not they're not homegrown. They're not part of a system that's been developed or will be developed by the bank or by whatever the institution or the VASP is that's trying to build it. So we find that there are benefits to doing what I call partnerships or using third-party service providers to build.
Right. And maybe, moving that towards you, Lana, it seems that, of course, there's the sort of expertise element, but there's also a network effect element, right? There's a network effect element of understanding all the counterparties, especially in the context of the travel rule. Could you explain, like, why the build versus buy question becomes kind of moot when it comes to travel rule implementation, especially with the network effects in play?
Yeah, so I would say so, compliance again, it's really going to be your credibility layer, right? And it has to be done right. Travel has to be done right. And it's very, very hard to build that by yourself. There's a reason why companies like us exist to deal with this, where we have, a lot of people behind this. And really, when compliance is done right, when travel rule is done right, it unlocks these partnerships and banking relationships, and most importantly, customer trust. Travel rule is just one example, right? Solving it means you're kind of ready for your institutional counterparties. And I would say at Notabene, we've seen clients close major deals faster because they could prove that they were travel rule compliant. Um, I would say, from a network effect perspective, many kind of underestimate this global fragmentation, if you will, of the crypto regulation. And there is no one size fits all, right? There, as I mentioned before, there certainly are jurisdictional differences in different crypto regulatory frameworks, certainly as it pertains to travel rule, which I already spoke about, kind of the dawn of travel rule, right? The critical mass of adoption in my presentation. I won't repeat that here again, but regardless, with these regional differences, and for example, you have different travel rule applicability thresholds and requirements for the information transmission. For example, Canada is different from US, which is different from, I don't know, UK and EU, right? So you need a system that's able to work through all of this, where this is all built in, where all of this is automated. And again, the goal of this, you want to be a business enabler, right? You don't want to be just a cost center. So the best thing that compliance could do is automate as much as possible so that the transactions are able to go through. So you only get back a subset of very small transactions that you need to review, where you know that this was a potentially illicit transaction that was stopped. It didn't go out. So you have a wonderful compliance framework behind it, and you're able to show that to a regulator why this works and why travel rule really is working.
And if I could add to that, what you've just said, Lana, I think it's really important when we look at the front end of the process that a VASP or whomever is providing the services tries to incorporate all of these various services, including those that you might provide through the travel service, travel rule services, that you can demonstrate to the regulator that the processes are in place with those who have experience having done this, have a good track record, because that accelerates the regulatory approval process, which accelerates launch to the business for the products. And so it all ties in with trying to be proactive with the business partners to think about the regulatory framework as in effect a catalyst to getting to market.
Yeah, absolutely. And we've seen that in the market. We've had prospects and customers come back to us where oh, so and so regulator, when we went to apply for our license, they mentioned you guys, or they mentioned, that they've spoken to you. Of course, every regulator, disclaimer, technologically neutral. No regulator endorses us or anybody else, but it's more so, like you said, Reba, it's that unsaid things, right? Like, oh, if a regulator has comfort with this provider, they'll probably
Yeah.
have comfort
Yeah.
with me. So come exam time, I'm going to be asked less questions, less things that I need to
Yeah.
go through and explain, and less things that they need to dig through. If they already have that comfort, the less conversations that we have, the better, you know?
And when it comes to those audits, if there's ever a glitch, God forbid, one of the aspects of it that also is important is that if it can be found that due diligence was done and that there was a good faith attempt to adhere not only to the rules, but also the policies and procedures that the entity has in place, that can mitigate things like fines, and also could also help with the reputation risk.
Absolutely.
Sure. Maybe to add to that, given that I heard the word audit and I work at Cryptio, we do a lot of the reporting side, but it's a similar thing. And the frameworks for financial reporting have also been established, whether it's with MiCA, whether it's in the United States with the new GAAP rules around financial reporting, and also the auditors are now comfortable enough with these institutions to take on full-on financial audits, PCA or B audits, to help these companies go and raise capital on the public markets. And we've seen some big news recently. Circle announced their intention to IPO. And we're seeing this institutionalization, which comes with a lot of the same levels of internal controls that are expected of any financial institution. And the unique part is that the underlying settlement infrastructure is different, so the tools are different. And that's what is what I think all of our respective companies are trying to provide here, which is how can we take that challenge away so that the business opportunities on the consumer side, revenue generating side, or even capital raising side become easier to achieve. Maybe moving on to the final question to everyone.
Before you do that, if you don't mind, Hemant, I would like to add to what you just said. What you said, it reminds me of, and the way I think of it is that regulatory compliance is kind of like the hub with all the different spokes from branching from there. So for example, audit. Audit is in part, if not large part, dependent upon the aspect of the regulatory compliance with any of the companies that you might audit. And then in addition to that, on another spoke, insurance. Insurance is a big factor in this as well, because the insurance companies look at compliance and look at track record, history, whether there've been any issues. And so that also impacts not only the ability to get policies, but also the cost of the policies. So there are all kinds of different factors, including, as you said, you were talking about potential capital raises. That also is an important part of it, being able to raise capital based on the due diligence and based upon compliance. So I'm sorry, I just wanted to add that before you go on to the next
No,
question.
please, I'm glad you did. That's I didn't even think about that on the insurance side, but it makes so much sense that, if there is a prudent track record of taking care of these controls, underwriters can make better decisions about the risks involved with insuring any particular financial institution. Okay, final question. What are you kind of excited about in the landscape, whether regulatory or otherwise, over the next year that I think is important to our audience here today in the context of compliance? What's on mind? What do you think is going to be interesting over the next year? Maybe starting with yourself, Reba.
Well, I would have to say stablecoins. It's top of mind, at least in the US regulatory and legislative discussions. I think that with the two bills that are moving through the House and the Senate, we might have a bill that gets finally passed closer to the end of the year. President Trump has indicated he wants something passed by August before Congress goes in recess. We shall see. But that, I think, will then be the catalyst for a lot of the other regulations and the framework to be built out. So I'd say the short answer is stablecoin legislation.
Excellent. Lana?
Well, you took my answer. I think stable coins are definitely, top of mind for everyone. As I was watching the markup of the stable bill yesterday as well. But no, I would say, along the side of stable coins, of course, as they're used for cross-border payments, I really think that this counterparty transparency is going to start to be a non-negotiable. I would also say we can expect to see more integration between compliance tools and blockchain analytics and stablecoin issuers, kind of along kind of the themes that you were saying before, Reba. Um, so I think that would kind of, something that we can expect to see. Um, I also think just maybe from a slightly different angle, since we brought up institutional players and banks and stuff, I don't think that not every bank is going to offer digital asset services, but most will need to offer, I think, digital asset services in some form, just to thrive as banks, and to offer what their customers are expecting to see. And I know, like, we're already working with some who are building very kind of quietly behind the scenes, so it's going to be interesting to see what starts to come out of that. Um, and then maybe one more kind of future trend, I would say, I alluded to earlier in the conversation about um, the updates that are going to be made to recommendation 16 from FATF, as it's updating it really for like these payments, real world use cases. And it's going to be interesting to see that. That is something that we at Notabene also have built for it, right? Where right away, very quickly, we've realized that the transactions are not just about Alice to Bob, right? They are complex, they are messy, with liquidity providers or MPC wallets and custodians in the way. And there has to be this authorization layer in this payment chain or flow, if you will. So it'll be interesting to see where that comes, like in the future, how that's going to evolve.
Amazing. And maybe to give my 2 cents on what I'm most excited about, given usually the moderators don't get to give their opinion, but I'm going to give mine. I'm really excited about. I was going to say stablecoins. Really excited about sort of what happens to the collateral markets, right? Like, we're seeing sort of a growing sort of demand for people to use their crypto assets and digital assets as collateral, especially Bitcoin. So they want to take loans against their Bitcoin, they want to leverage against their Bitcoin, and this is happening on an institutional level, right? Like Cantor Fitzgerald is now wanting to deploy $2 billion against Bitcoin in loans at very competitive rates. So we're going to see some institutional capital flow into these sort of crypto-backed debt instruments. And what's really interesting, especially from this conversation I've just heard, we've got, especially with what Notabene has built, a counterparty identity network, right? And on that, to be able to see how all of these technologies converge, to be able to understand not only just who is the counterparty, but what's maybe the credit worthiness of this counterparty. What are those next steps that happen based on top of the settlement network that's already there? Now maybe we'll be introducing more identity networks, more sort of real world information that help people make, markets, whether it's insurance markets, debt markets, on top of our crypto rails. And I'm very excited to see what happens with those. And again, for the regulators as well, how interesting that will be when banks start giving loans against crypto assets. The reg cap requirements for those loans, what's that going to be like? So I think there's going to be a lot of play that happens, a lot of these handbooks, the handbooks that all the regulators have, these principle-based approaches. How do those principles flow through to actual sort of guidance for the market and interpretive letters? This is going to be very interesting over the next year, especially from a compliance point of view, from my side. Anyway, we've got time for some questions. If people have questions, plug them in here. I see that we have a couple in here already. Some of these, maybe, okay, travel rule for the Lightning Network. What do we think, Lana, what do you think? Any thoughts on the Lightning Network?
Oh gosh, can never be an easy question. I think there's definitely, unique regulatory and probably technical challenges with implementing Travel with Lightning Network, it is something that honestly my team has already been thinking about. So if anybody wants to talk a bit more about that, I mean, it's not something that I can answer for you quickly in like 30 seconds on just general thoughts on it, but I'm happy. Let me see who asked this question. I'll respond to you and give you my email, and we can pick up the conversation and talk about some of the technical challenges and some of the proposed solutions that we have for that. I'm just not ready to publicly talk about some of the proposed solutions.
For sure. Any other questions? We've got, I think we've got, they've been covered.
If you don't mind, I would like to add to what you had just said a minute or two ago, Hemant. What I find interesting when you mention collateral is how that is going to generate and spawn a whole new ecosystem for the financial industry. It's going to enable new products to be developed. And let's say that we look at it from the perspective of derivatives and different hedging products and the like. The more they get adopted by the institutional investor base, let's just say hedge funds and the like, then the more chance it is that they get built out and it grows exponentially. So if the hedge funds start embracing it and you get prime brokerage activities to support it, then you get investors investing in the hedge funds, and it goes on and on and on. And eventually it hits the retail market.
Yeah.
Yeah, for sure. Yeah, we definitely see like a lot of traction here, and we're also seeing not even just hedge funds, even sort of what are perceived as sort of lower risk buy side, looking at these crypto-backed loans as pristine debt. They see it, 140% collateralized. Even the ratings agencies are getting involved to rate these crypto-backed debt instruments. So yeah, as you said, I think it will spawn a new kind of economy around the financialization of crypto assets. But what becomes essential here is, again, how is that collateral managed underneath? What are the controls? How do we make sure this doesn't run away and recreate all the problems of traditional finance, right? And I think that's going to be the interesting play.
As we can see by the discussions that are being taken up right now in the Congress, both the House and Senate, there is a lot of concern around being able to provide yield on top of these types of assets. So I think we're going to still have to have an understanding about what the risks are so that we can have conversations with the legislators about how to think about it.
For sure. Okay, to maybe summarize, we've talked about the travel rule. If you've got questions, please reach out to Lana. Lana, she's dropped her email in the chat. If anyone wants to have a look, you know where to contact her. Notabene, well known in the industry. If you've got questions about white labeled infrastructure, exchange infrastructure, infrastructure on bringing crypto products to market, please reach out to Reba. AlphaPoint, I'm sure you guys will be sending an email afterwards. And if you need help with back office, accounting, reporting, Cryptio, and I'm Hemant, I'm sure we'll be sending out some information on that too. But thank you so much for your time. And if you've got questions, reach out. But thank you, Lana. Thank you, Reba. And thank you to the marketing teams who helped set this up.
And thank you, Hemant, for moderating.
Thanks. Bye-bye.